How long do you have to wait before selling to avoid capital gains taxes? This week's Q&A with Kylie is addressing the frequently asked questions revolving around capital gains taxes to include additional information for our active duty military clients. In just the last week, I received 3 questions about this topic, so my hope is that after this video, you have a better understanding of what capital gains is and how it applies to you for your individual situation. So first of all, what are capital gains? Capital gains are taxes you owe when you sell an asset for more than its adjusted basis. In other words, a profit. The opposite of this is a capital loss, which is when you sell an asset for less than its adjusted basis, aka at a loss. Back to capital gains. Quoting the IRS, if you have a capital gain from the sale of your main home, you may qualify to exclude up to $250,000 of that gain from your income, or up to $500,000 of that gain if you file a joint return with your spouse. Let me translate. So if you make a profit off of the sale of your primary home and you are single, you may qualify to exclude up to $250K of that profit, not the sale, the profit, or up to $500K profit if you're married. An important factor, however, is how you file your taxes, as some married couples file separately. I'm not here to tell you how to file, I'm just here explaining the tax law. So now you qualify for this exclusion, you must meet both the ownership and the use test. Use meaning you've lived in the home as your primary residence for a minimum of 2 out of the last 5 years. Also, you are not, I repeat, not generally eligible for the exclusion if you've previously excluded the gain from the sale of another home during the 2-year period prior to the sale of the home you're currently trying to sell. Let me give you an example scenario. It's a somewhat complicated scenario, but follow me. You buy a home and you live in it the first full year. Then you rent it out for the following 3 years before moving back in and residing there the full 5th year. Given just this, you qualify for the exclusion because you owned the home for 2 full years out of the last 5. However, if you purchased home number 2, which you lived in for the 3rd and 4th year, prior to moving back into your first home for the 5th year and want to qualify for the exclusion on each property, you would need to keep the second home for an additional 2 years beyond the date you moved out so you can sell home number 1 without losing the first full year of residency in that home. Because remember, there's a 5-year test. Then in 2 years from the sale of home number 1, you can then sell home number 2. If you do that right away, then you'd have owned home number 2 for 4 years, which would mean you've got 1 full year left to sell and qualify for the exclusion on home number 2. Please keep in mind, I am not a CPA or a tax professional, and I always recommend that you speak to your CPA or tax professional. If you need a recommendation for one, I can connect you with one of ours. Now, if you're active duty military and you're still listening, pay attention. As long as you or your spouse are qualified on official extended duty for more than 90 days or an indefinite period and living at a duty station that's at least 50 miles from your primary home, or living in government housing, you may elect to suspend the 5-year test for up to 10 years. So, if you purchase a property in, say, Norfolk, Virginia, which you lived in for a minimum of 2 years, then PCS to Charleston and lived here for 8, you could still sell your home in Virginia and qualify for the exclusion. Same goes if you lived there for 1 year, moved elsewhere for 8, and then returned for year 10. As long as you live in the home for a minimum of 2 out of the last 10 years, and you're still active duty that full time, then you qualify for that suspension. I know that was a lot, and if you still have questions about capital gains, please reference the IRS website. I'm a visual learner, and reading helps me understand. But if you're still confused and want help understanding your specific situation, knowing that I'm not a tax professional, give me a call. I'm always here to help answer your questions and be your real estate resource. If you have any other questions, please email, text, or message us, and I'll be sure to answer on our future Q&A with Kylie. Take care.